It's RRSP season. You hear it everywhere, but what does that mean? Well, if you put money into your RRSP before March 2nd, you can lower your tax bill and you could receive a tax refund in just a few weeks. Great news, but if I don't have cash right now, then I miss out, right? Not quite. This is a tax tip that many Canadians don't know about. I've been doing it for years and it saved me a lot of money. You don't have to deposit cash into your RRSP to get this benefit. You can transfer from your other accounts into your RRSP and it still works. The transfer counts as a contribution. Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll break down RRSP transfers to save you money and make the most of the next few weeks. There are 3 main steps I will cover today, and each of them have a deadline. The timing is important, so you have to act fast. Step 1, open an RRSP account. I have my RRSP with Questrade. Step 2, transfer from your bank or brokerage into Questrade. There are some important rules here, so pay attention. Questrade will even rebate your transfer fees up to $150, so it doesn't cost you anything to switch. That's a huge win, but you want to start the process soon to make sure the funds arrive in time. Step 3, transfer within Questrade into your RRSP account. You can move either your cash or your existing investments from your TFSA or your non-registered account into your RRSP, and that counts as a contribution. You lock in a tax deduction as long as you do this before March 2nd. That's when RRSP season ends this year. Please be aware, if you're transferring from your TFSA, it will be considered a TFSA withdrawal, and you will not get that amount of TFSA room back until January 1st of next year. More on that later. Let's get to the details, but first I want to thank Questrade for sponsoring this video. They are a fantastic platform for DIY investors like myself, and using them is a great way to maximize the tax refund you get from the government. I'm always trying to save you guys money, and the timing is perfect for the RRSP season. So, step 1, open an RRSP account with Questrade. Don't worry if you already have an RRSP with your bank. You can open multiple accounts, no problem. I've been using Questrade as my main platform for over a decade now. I've already made a ton of videos on why I love them, but bottom line, they save me a ton of money. They don't charge any trading fees or commission fees, and for US investing, very important in my RRSP, I can avoid those expensive currency conversion fees because they support NORBERT'S GAMBIT. This alone has saved me thousands over the years, and they support all the major account types, including the RRSP and spousal RRSP. Make sure you use my referral link down below and you'll get a $50 sign-up bonus. That's bonus number 1. Click my link and you'll see my custom landing page. That's how you know it's working. Or you can manually enter my referral code, Canadian t-shirt, to get that $50. Watch this video for a step-by-step walkthrough on how to open an account. Step 2, transfer into Questrade. Whether you have a bank or a brokerage, you can transfer your cash, stocks, ETFs, and funds into Questrade. This is key. You don't have to sell your stocks to do this. You can do an in-kind transfer, meaning the shares themselves move from your brokerage into Questrade. No sale, no capital gains, and no taxes. But this is important. For an external transfer, the account type must match. So you can do a TFSA into a TFSA or an RRSP into an RRSP, but you can't transfer your TFSA into an RRSP, at least not in one step. Once you're within Questrade, then you can move your cash and or investments from a TFSA into an RRSP. That comes in step number 3. Again, the CRA will count this transfer as 2 separate tax events. One as a TFSA withdrawal and one for an RRSP contribution. Let's go through the process. I already have a 20-minute tutorial showing this in detail, but we'll go quick. On Questrade at the top, go to Move Money and Transfer and choose Transfer an Account to Questrade. Notice here, if your bank charges you a transfer fee, Questrade will reimburse you up to $150. We'll come back to this. Enter the institution and account information. You can either transfer the entire account or specify a partial transfer. Remember, you can do an in-kind transfer where nothing is sold. The shares themselves just move to Questrade. This means that your investments will transfer at your original cost basis. But if it doesn't, you can submit an investment statement from your broker to Questrade, and they will enter in your cost per share. Even though income and gains are tax-free in a TFSA, this is important if you want to track your unrealized gains and losses at your original cost. Or you can do a cash transfer where the shares are sold and then the cash is moved. Keep going, sign the documents, and then you wait for the transfer to complete. You can track the status down here at Move Money History. Again, your bank may charge you a transfer fee. You can see here that I was charged a $45 transfer fee from Tangerine, but I was fully reimbursed, up to $150, so it didn't cost me a thing. You just need a bank statement showing that transfer fee and upload it to Questrade. Go to Documents, Upload, and here in Document Type, select Rebate. And then you'll get that rebate within a week or two. Once everything is within Questrade, now it's time for step number 3, the internal transfer to your RRSP. This step is a trick that most people don't know about. Steps 1 and 2 are getting your money into Questrade. Step 3 is where you get the tax benefit. You can move your money from your TFSA or your non-registered into your RRSP, and this counts as an RRSP contribution, the same as if you made an RRSP deposit. So if you transfer $10K from your TFSA into your RRSP, you get the same tax benefits as if you contributed $10K in cash. You get to reduce your taxable income by that full $10K. If you're in a 40% marginal tax bracket, that means you could save $4,000 on your tax bill. And since we're in RRSP season, you don't have to wait until next year to get that money. You could receive that tax refund in a matter of weeks once you file your tax return in March or April. The deadline for this step, RRSP season, is March 2nd, so don't wait. I already have a whole video on how to transfer between accounts. There are some important tax considerations, but here's the quick version. When doing an RRSP transfer, it really depends on where you're transferring from. I'll cover the 3 main options. Option 1, TFSA to RRSP. There's no taxes at all. The TFSA is always tax-free. And this transfer does count as a TFSA withdrawal. That means that you will regain that TFSA room next year in January. This is a powerful strategy. You reduce your taxes today and you'll presumably pay a smaller tax bill years from now in retirement at a lower tax bracket. This works whether you're moving cash or doing an in-kind transfer of your stocks. Be careful not to over-contribute to your TFSA. If you've already hit your 2026 limit and you transfer $7,000 to your RRSP, you cannot replace that money in your TFSA until the following year. Otherwise, you face a 1% monthly penalty. The 1% per month penalty is the same for RRSP over contributions. So before you contribute to your RRSP, make sure you know what your available contribution room is. And you can check this with the CRA as well as your own financial records. Also keep in mind that your TFSA room is shared across all of your TFSAs. For example, if you have a TFSA at bank number 1 and another at bank number 2, you do not have $7,000 of contribution room for each TFSA. Your room for 2026 is $7,000 for the year across both TFSAs. This same shared room applies for RRSPs and all other registered accounts as well. Option 2, FHSA to RRSP. I only suggest doing this if you're certain that you won't be buying a home. Remember, the FHSA already has the tax deduction benefits of the RRSP, so going from one to the other doesn't really save you money. You can't double dip and claim that tax deduction again. With the FHSA, you get the most benefit if you use it as intended to buy your first home. That way, your withdrawal is 100% tax-free and you get to keep that tax refund. But if you're absolutely certain that you're not buying a home, then transferring to your RRSP is the backup plan. Watch my FHSA Explain video for all of those rules. Option 3, non-registered account to your RRSP. This is your taxable account, either margin or cash account. Just like option 1, this counts as an RRSP contribution, so you lock in that tax deduction. But unlike the TFSA, this move is not tax-free. You're moving your stocks from your taxable account into a tax-sheltered account. That's called a deemed disposition. Even if you're not selling those stocks, that transfer is treated as if you sold the stocks at market value. To keep it simple, you can always just transfer cash instead of shares to avoid this complication. And if your stocks have gone up in value, you have to pay capital gains tax on that profit. For options 1 and 2, all those accounts are tax sheltered, so don't worry about it. But for a non-registered account, yes, you do have to consider capital gains tax. You will lock in that tax deduction right away, but next year, you might have to pay a capital gains tax if you transfer at a profit. Sadly, if you transfer at a loss, meaning your stocks went down in value, you don't get to claim a capital loss. It's a little unfair, but those are the rules. I go over this important point and the different options in this video right here. When transferring investments in kind, it's always important to ensure they are qualified investments for the purposes of the RRSP. Transferring a non-qualified investment, such as stocks that trade solely over the counter, that may trigger penalty taxes on the asset's fair market value, and it could cause all future earnings on that investment to be fully taxable. This is especially important for your in-kind transfers from your non-registered accounts to your RRSP. With Questrade, internal transfers are very easy. Just head to the top, click Move Money, then Transfer, and select Transfer Between Accounts. As before, you'll see the choice to transfer cash or do an in-kind transfer of your stocks. This applies to all three options we just talked about. These internal transfers are quick, usually only takes a few business days. I've got a lot more tax tricks that I use in these videos right here, and watch the rest of my RRSP guide to make the most of this powerful tool. We're in the middle of RRSP season, but it won't last long. Here are the deadlines. Step 1, open a Questrade account with my $50 sign-up bonus. Step 2, transfer from your brokerage into Questrade. Remember, they'll cover your fees up to $150. Step 3, transfer within Questrade into your RRSP. Do this before March 2nd to lock in that tax refund this year. Thanks for watching, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys!